Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, we're starting off with the hourly chart today because I think it paints a better picture of what's happening in the market, which is just a very, very steady walk up, just a steady move higher after the matching lows at weekly pivot back on Thursday. You had the dip buy here. The bears needed a lower low that day. They failed to do that. And once this established, you had a little gap up, another higher low, and then it's basically been, with the exception of a couple of hours yesterday morning where they pulled it back, all the way to 52.25. It grabbed the hourly mid-band back, established support, and they walked it up the rest of the day. We spent the entire day long, with the exception of we were short a little bit to try to take advantage of this initial move down, the one that came, in the 10 o'clock hour. But once that didn't pan out, once you saw 56 quarter hold create another higher low, the 5-minute mid-band at the time was about 58. We ended up getting long 58 quarter, anywhere in the 58s, depending on where people in the room got in, and we rode that up all the way into the close, which is a really solid, 5, 6, 7 handle move higher. In the overnight, we saw some pullback to the hourly mid-band. We got long again, this time in the 65s area, and we've gotten paid. We got our risk out of that one, and we're hanging around with even stop. And if they take us out, great. If they don't, that's fine. But if you look at a 5-minute chart, what you're going to see here is you've got VWAP and you got a proprietary moving average, both sitting at 65.75. You got the 5-minute mid-band, and these areas tend to act in concert, especially off of the open. So the inability to take those areas out yesterday robbed the bears of what was probably their best chance to do a weekly pivot test. And as long as that stays the case, as long as price wants to live above VWAP and above the 5-minute mid-band and above our proprietary moving average, you're going to see more of the same. You're going to see more of the same. So this is the reestablishment down in the 58 area that I was talking about yesterday, and that, they get it for a little bit, but they can't hold it, and that's the key. And until you see a move below these areas come back and bump into these areas and fail, which is what you saw when the bears hung around and made a difference last week, until you see that dynamic, you have to keep buying dips because the market is in a vacuum, wants to head higher. Do they want to walk it up into the Fed meeting tomorrow? I don't know. But I do know that until these price areas get converted, that the trade that is paying is the long trade. So, daily chart. There's not much to show here beyond the fact that we were compressed. We did that big old band ride. We pulled back and we tested the 9-day simple moving average for a couple of days. Now we're moving back up off of that. Do I think we're going to do another upper band ride? Probably not, because you're really starting to see the bands expand now. The bandwidth is above 4. You can see them starting to really, expand to the upside. It's going to be very difficult for price to keep up with that upper band. Doesn't mean we're going to stop going up, but the rate of ascent is not going to keep up with that band. So as we head into the rest of this week, as we head into next week, as a function of price, that 9-day simple moving average is going to continue to tail up higher. We're going to get a test of that at some point. And as long as that test produces support versus a break and hold that creates resistance, the bulls are going to continue to have the upper hand. I don't like sitting here telling you I see very little reason to be short, but absent news, and whether that's tomorrow at 2 o'clock or in the next 5 minutes, absent news, it's very difficult finding reasons to be short this market. Yesterday morning was a prime example. You had some moron in New York City try to take out Port Authority, subway station, bus terminal, whatever it was, and all we printed was 52.25. I would argue 5-10 years ago that would have been a dramatic push down in the market. The tape has adapted to absorb these things that go on in the world, which, rightly or wrongly, the tape is the tape. and you have to adapt to it as well as a trader. We should have tested weekly pivot yesterday morning. We didn't. And when we didn't, that was the canary in the coal mine that we were going to walk up the rest of the day, with the exception of about an hour there in the 10 o'clock hour. That's exactly what we did. All right. Everybody have a fantastic day. I'll be out with an update later on Twitter, Instagram, Facebook. Until then, trade them well. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.